Hey traders, welcome back to the Modern Day Trader. Today, we're diving into one of the most underrated tools for building smart market bias, the Commitment of Traders Report, or the COT report. If you've ever wanted to know what the big players or the institutional players in the market are doing, this tool is for you. So without further ado, let's jump straight into it. The first question obviously is, what is the COT report? The Commitment of Traders Report is a weekly report released by the Commodity Futures Trading Commission, or CFTC, every Friday. It shows you the positions held by the different types of traders in the futures market as of the previous Tuesday. So, for example, this Friday past, there would have been a report released, but that report would have been based on the trades that were recorded or the positions that were open on this past Tuesday. There's three main categories you'll see in this report. Number one, the commercial traders or the hedges. These are businesses and institutions that uses futures to hedge their positions. Then you'll have number two, the non-commercial traders or speculators. And these are the big funds, institutions, and professional traders. And this is where you want to pay most of your attention, right? Just because this is the big money. This is the people that are actually moving the market. Then number three would be your non-reportable traders. These are usually smaller traders or smaller retail traders like myself and like yourself. So when you do look at these figures in the Commitment of Traders report, what you will see are that they will usually be following the trend for the most part and continuing to follow the trend, even though there are potential that uh, even if the technicals are showing that the trend is potentially changing, and these traders usually lose, and that's why they are called the smaller retail traders. Why is the COT report important? Big money moves the market, essentially. And the COT reports lets you take a peek into or peek behind the curtain to see where the institutional traders position their money. It's especially useful for spotting long-term market sentiment, potential market reversals, and overcrowded trades. If institutional traders are heavily long or short a market, for instance with GBP, JPY, it can give you a valuable insight into what could possibly have happened or will happen in future moves, right? So essentially what you're going to be seeing is what we'll be taking note of is the non-commercials and what they are doing so that we can then follow their footprint and see potentially what will happen into the future as an additive to your plan. How do you read this report, right? This report, when you actually open the report, there's two things to focus on. That's your net positions. This is the difference between the total number of long contracts and short contracts open for each group. If non-commercial traders have a high net long position, it signals bullish sentiment, and then vice versa for shorts. And then number two, what you will be looking at is the change in positions. Look for sharp increases or decreases in positions from week to week. Sudden changes can hint at a sharp or a shift in sentiment before the market actually reacts. So as I mentioned, these reports are only released on a Friday from that previous Tuesday. So when you're looking at this report, this is from the previous Tuesday. And if you've seen very sharp increases in change in position, what that can then schedule is a potential shift in sentiment, and the market could potentially react to that information immediately. Now, how do you actually apply this uh, this information, how do you apply the COT into your trading? Let's take a look at pound, for instance, pound yen. When you do check the CFT report, right? Firstly, let me just get into where do you find it. So the actual report, the actual COT report is released, as I mentioned, by CFTC every single Friday based on that Tuesday's positions, right? And as I mentioned, you'll see three types of traders. So you have your non-commercials, which are your big players. You have your commercials, which are your hedge funds. And then you have your non-reportable positions, which are essentially us, right? And these are the numbers that you're going to be looking at. So here they will tell you your long position. They will tell you your short position, the number of short positions open at that time for non-commercials, and then they will tell you your spreads, right? And this is the actual report. The reason why you need to understand this is just so that you know where to actually get the actual numbers from the report. And then you will see the changes here. So you can see that we actually went down by quite a bit. We went down by 13,253 contracts uh, from last week, right? So the change is actually quite huge in long positions. And then not then that only, you can see that the short positions actually went up by 4,063 contracts. So essentially now what you have is a net long of about a net short position of about 17,000 contracts, right? Now, yes, I wanted to show you guys the actual report so that you guys know what the actual report looks like. But the best place to actually find this information and have a visually appealing way to comprehend this information is from barchart.com, right? So on barchart.com, you'll come onto the futures tab. On the futures tab, you'll click legacy report. And then when you do get into legacy report, you choose currencies, you choose your non-commercials, which are your large speculators, and you choose the summary report. And this right here will then give you all of the particular index or all of the currencies that you will have, and this will tell you where the large speculators have changed positions from the previous week. You'll see here based on the changes, this is the net change, and then this is your net position, right? So essentially what this is saying, if you go back to your CFTC report, essentially what your net position is saying is that your long position minus your short position gives you your net position. And then the changes will essentially be what last week's long number of contracts were and then what it is now. And that's your change. And all of that can then be visualized and put into this report. So what we can see here essentially is that over the long term, right? As of Tuesday, we had a net short position on the Canadian dollar, for instance, with 119 contracts, 119,000 contracts. So over the long term, the large speculators are largely short on Canadian dollar, right? But now what you need to understand is that although they are largely short, over the short term, you can see that change from last week to this week was that we actually changed to a long position, right? And what that essentially means is that there is potential that the Canadian dollar could see potential spikes and become bullish just for this week, because largely we are bearish on the Canadian dollar. Now, the reason why I use this, it's just as an additive for my long term, my next 2 to 3 week view on the market. But then what I use the net change for is also to just confirm that my bias for the week is following the footprint of that of the large speculators, right? So when you're taking a look at, for instance, pound yen, after you have done your analysis and you can see that we are clearly short, right? And then you also add the current state of what the world is going through with Donald Trump announcing tariffs on tariffs on tariffs, right? You understand that pound yen, based on my video that I made last week, is a safe haven in risk on markets. So what that means is that essentially the world will start to move money into the Japanese yen. And now you come into the commitment of traders report from the parchart.com, and what you can see is that we have a net long position on Japanese yen, and then we have a net change of 25,000, which is increasingly getting bigger week on week. And what that essentially means is that if you look at your long positions, it had a change by 14,000 from last week, and then your short positions went down by 10,000, and that's how you get that 25,000. Now, how do you interpret this on the market? When you're looking at pound yen, obviously the yen pair is on the back end of pound yen, right? So if yen gets strong, it's only natural that GBP JPY will start to be bearish, right? So now we already know that based on market structure and based on our analysis that we are pretty bearish, right? We know that we are anticipating shorts for this week ahead. And that's what I'm looking for this week, right? Now, when you come into this information and you start to look at this, and you can see that the large speculators are largely long on Japanese yen, which then means that GBP JPY should then be largely short, right? And now what you can see is that we have this, and that change then means that right now they're starting to move the money a bit more fast, and the money's starting to move into the yen a bit faster. So there could be a large push in the Japanese yen in this coming week, which means that we could have a lot of movement on yen pairs this coming week, right? Now you start to put that together with the pound. When you start looking at British pound, what you can see is that yes, our net position is short by 17,310 contracts, right? However, so we net long, right? However, what you can see is that our net change currently is negative. So what that essentially means is that week on week, from last week to this week, we actually had a change in the long positions by minus 13,253. So we went down. So there's less long contracts in the market right now from large speculators from the previous week. So essentially they're closing their long positions right now on Great British Pound, right? And then you can see that people are actually starting to short Great British Pound a bit more, and there's 4,000 more contracts than what there was last week. And that then gives us a net change of minus 17,316 contracts. So now when you start to put these things together, right, you have your technical knowledge, and you know what is going on in the markets based on your analysis for pound yen. We know that we are short based on what we are seeing in the market right now, right? Then you combine that with a Japanese yen that is fairly strong on net positions, and then also fairly strong on net change. And then you combine that with a Great British Pound that's starting to get less and less on the net positions, and could potentially see a net short position very soon. But then when you're looking at the net change week on week, you can clearly see that more and more people are closing their long term or their long contacts, and more people are actually starting to short Great British Pound right here. So you can start to put those two together. You have the British pound on the COT report being in the net change column, being bearish, being having more short positions, and you can see that by the minus, and obviously it being displayed in red. And then you have Japanese yen being bullish, and when you put that together, so we have essentially what we have. Where is my arrow? So we have Great British Pound in the change being bearish, right? And then also in the net positions is also starting to be closer to that 0 point, right? Then we have Great British or pound or yen, sorry, Japanese yen being bullish, not just in the net change positions, but also in the net positions, right? So what that then means essentially is that this is weak, that's strong, And what does that mean? That means that there is now a high chance that price action could potentially start pushing bearish. And now you have an extra confirmation that price action could actually potentially push bearish. And that thing means, okay, now you start to know that I have the large speculators on my side. What are the chances of price action actually pushing bearish? There's a higher chance now that because now you've put together the technicals that we are pushing bearish on the chart, you know that based off from what is happening with the tariffs and everything that Trump is speaking about, that that we are actually in a risk on situation here, or actually risk off, sorry, we are in a risk off situation here. Money is being moved to Japanese yen, and that's being confirmed on the commitment of traders report, along with with our British pound confirmation right here. And that then essentially means that now for this current week, for the week moving forward, we could potentially start to have short positions on this particular pair. And that's the way I look at the market. Then you then go ahead and you start anticipating how you could potentially enter when you start to see these things happening, right? So for me personally, I can clearly see the price action is making lower lows, lower highs. We've broken out of these areas right here. We've come down, we've broken this area. We have our previous higher low area, and we have these areas where we have clear liquidity above it. Now, are we going to induce those areas before potentially pushing to the downside? At the current moment, we don't actually know. What we do know is that we can drop down time frames to potentially see what could potentially happen, right? So we know that price action had this very impulsive push to the upside, breaking internal structures in the market. So you can see that price action had actually broke this structure right here. We'd broken these areas right here on the 1H, and then we've broken these areas right here, right? But then what you can start to see is that price have this correction, right? And in this correction, you can see that price broke above these areas, right, on the 1H. So my plan for this week would then be for price action to potentially induce some liquidity to the downside early in the week to then potentially see the upside move into key areas in the market like this, or even like these areas up here where there's definitely liquidity above. So if we can induce that liquidity, what you will then potentially see is price action forming this internal structure all the way into these potential smart money taps. And then after that, if you can see the shift of structure after price action enters your higher time frame smart money areas, if you can see potential inducement of liquidity areas, then what you can start to do now is to anticipate that price action will continue down. And if you get into a short in and around these high areas, and you can see that there's very big impulsive pushes once you're in the short, you can start to target these areas right here, and then you will have a great chance of getting a really good RR trade, right? And those are the ways where you can use fundamental data, not just information that you need to arguably uh that's not qualified, or not that is not qualified, but it's uh, it's left up to interpretation, right? When you're looking at GDP and how it affects month on month GDP and how it affects the market, you need to actually you need to comprehend that information, put that information together, and then make a synopsis on and make a conclusion on what could potentially happen with all that information. Now, with the commitment of Taylor's report, there is actual data and actual figures backing what you see in the market. And that's the great thing about the commitment of traders report. Now, fundamentals or macroeconomics is not the only fundamental thing that you need to learn. Now, understanding macroeconomics and understanding these principles are great to have a holistic view of the market. But what I find is that the commitment of traders report, it's more stats based, it's more numbers based. Where is the market moving and what it could potentially do based on large speculators, based on commercial traders, and combining those things to then potentially see how you can add that to your plan and follow the money and trade in that direction of the money. Now, an important note, guys, is just to note that this is not solely a tool that you can trade based off from. You need to decide how you actually add this to your plan. Me personally, I am going to treat this in my trading pivot that I'm in right now. I'm going to treat this as a potential confirmation for what I had already seen on the charts. So essentially what I will do every week is I'll come to the charts, look at the markets that I'm looking at, do my analysis, and then after I do my analysis, I'll start to take a look at the commitment of traders report, and I will then filter my number of pairs down to a particular number of pairs based on all the added confirmations and confluences that I have from my technicals, where price action is trading right now. Is it trading close to a magnetized area that it could bounce out of or potentially reverse? Is there chances that price action could go into a point of interest and then potentially reverse? Is there potential liquidity close to where the market is trading right now? And then you add all the extra things that's happening in the world, in your macroeconomics, and then you then use your COT report for a stats-based number. As we looked into the net change, we looked into the net positions, and I explained what it is and how to actually take into account what could potentially happen in the next week, in the next 2 weeks, using this as an additive to what you already have in your trading plan. And that's the way I would potentially trade it, and that's the way I am going to trade it and use it as a tool to follow the smart money. I don't really want to use that because, certain people use that. But to follow the large speculators and to follow essentially the institutions. Guys, I think this tool is a really, really great tool. And I think it is something that you can add to your plan that's going to add value to what you already have. And that's how you use the commitment of traders report to level up your market analysis. And so if you found this helpful, drop a like, subscribe, and hit the bell for more trading insights every week. From your boy Marcy at the Modern Day Trader. Please don't forget that your unmatched perspicacity, coupled with the sheer indefatigability, makes you a feared opponent in any realm of human endeavor. So, I'm the Modern Day Trader, and I'll catch you next time on the next one. Peace out, man.